Pablo, good to see you. How you doing? How you been? Funky, good to see you as well, brother. How you doing? How you been? What else? Good to see you, brother. How you doing? I'm just trying to pin the live before we start off. Let's see. There you go. Pin to your profile. Pin. There we go. Jason, good to see you, brother. How you doing? Scott, good to see you as well. How you doing? Miles, have you been? Good. How have you been, Frank? But how's everyone doing? Hello, brother Miles. Good to see you back. Good to see you as well, T. Hi, Miles. Mike, good to see you as well, brother. How you doing? Good evening, Miles at CMF. Good to see you as well, Freedom Forever. How you doing? You still at your business partner's house? Not today. I came to his house. Not still at his house, but today I came to his house. Doing well, thank you. How are you? I'm doing great. Woodhouse. Hello, brother Miles. Great new look. Merry Christmas to you and CMF Comatose. Good to see you as well. How you doing? Thank you so much. And Merry Christmas to you. Merry Christmas to everyone. And I hope everyone had a good time, essentially, with their family or friends, essentially, during the Christmas time. Even Miles at CMF, how was your Christmas? It was great, Joe. Good to see you. How you doing? How was your Christmas? Share the live. Let's go, Scott. Okay, let's do intro, disclaimer, what we're going to talk about on tonight's live before we start off anything. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday, Friday, 10 p.m. long time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. Pretty much all the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And this is episode 424 of the CMF Live. This is episode 424 of the CMF Live right now. And on tonight's live, we're going to be discussing quite a few things, essentially what's been happening around the market space. We're going to talk about the silver market space and the impact it's having on the crypto space. We're going to talk about the transition happening inside the crypto space going into 2026. We're going to go through some prospective news on the crypto space as well, and some announcements to go through. And it's mostly to do with CEOs coming out with a lot of perspectives that we are going to be covering on tonight's live going to 2026 and what they think is going to be happening. Now, the first news we are going to be covering is regarding the silver market space and essentially impact on the crypto market space, positive or negative. Before we do that, let's go inside the comment section first. I just want to say thank you so much to everybody who has straight away liked and essentially okay, we got some weird people inside the comment section. Let me just do this. There we go. Okay. The first news we're going to be covering on tonight's live is regarding the silver market space. And thank you so much to everybody who has straight away liked and retweeted this live show if you're watching this on X. And thanks so much to everyone who's also essentially liked the live show if you're watching this on YouTube. If you haven't, CMF members, drop a like and a retweet on X and drop a like on YouTube and put a comment outside the live as well. How's it going, brothers? Going great. Good to see you, Crypto Don. How you doing? What will XRP be doing in these last 2 days? What will XRP be doing these essentially 2 days? I wouldn't say much will be happening inside the crypto space these last 2 days going into New Year's. It's all about 2026 now regarding what's going to be happening in terms of the regulations. The Clarity Act will come into effect in 2026, the one that was essentially voted on the House. Trump still does need to sign it. We're expecting more regulations in 2026 as well, beneficial for the crypto space. And in terms of more institutions coming inside the crypto space in 2026 due to no more gray areas because of regulations. For the last 2 days that we got left, essentially in this year, not much would be happening unless we have some excellent news inside the crypto space or in terms of regulations, I would have to say. But it's all about essentially first quarter 2026 going forward now. Now, the first news on tonight's live, we're going to be talking about silver, because silver and gold have been having some sort of impact on the crypto market space. And for Bitcoin, it's not been that great regarding the gold market skyrocketing, Bitcoin not moving at all, even though it's known as digital gold. And then silver followed through by also skyrocketing and then also impacting the crypto market space in a negative way. Now, silver did drop, and it's essentially what we're going to be covering right now and the impact it could have on the crypto market space, possibly in a positive way going forward. So, silver falls 13% in one day as essentially Bitcoin, Ethereum, and XRP face new macro tests. Silver prices now essentially saw a sudden and sharp sell-off, falling nearly 13% in a single day from around $83 to $73 essentially dollars per an ounce. The drop essentially erased an estimated $550 billion from silver's total market value and marked one of the most dramatic moves in the metal essentially this year. The decline followed essentially a powerful rally earlier in the week when silver essentially surged towards a potential all-time new high near $83. The rapid essentially rise was fueled by heavy essentially leverage and strong speculative activity, leaving the market vulnerable. One of the triggers of the sell-off essentially was a decision by the Chicago essentially exchange to raise margin requirements on silver futures, hence why essentially silver decided to drop. Higher margin requirements forced traders to either add more cash or reduce exposure, which is why the sell-off happened. In highly leveraged essentially markets, this often results in forced selling, even when broader essentially demand for the asset remains intact. Market stress also intensified following unconfirmed reports that a large bank with significant silver exposure failed to meet the margin call and was liquidated during the overnight essentially session. The identity essentially of the bank has essentially not been disclosed, adding uncertainty and fueling essentially volatility inside of that market space. According also essentially to market reports, the US Federal Reserve injected approximately $34 billion for emergency overnight repo essentially operations to stabilize the funding markets following the silver shock and related derivative stress. This injection essentially came in addition to earlier liquidity measures taken during the month. The US pumping essentially the market space, $34 billion to be exact, is actually quite bullish. Similar market conditions have also appeared before. In both 1980 and 2011, silver experienced rapid price increases following essentially repeated margin hikes. And from exchanges, these moves also triggered forced selling and also essentially marked a major turning point in silver's price cycle. Despite the sharp decline, silver also continues to benefit from strong long-term demands. However, the metal has started to essentially extremely volatile phases when margin calls essentially are applied during aggressive price moves, and momentum often slows essentially quickly, and liquidity may shift elsewhere across global markets. That's the part we're essentially mostly looking forward to. You see, when Bitcoin started tumbling down, gold started climbing. The money for gold had to come from somewhere. Obviously, it could come from new investments, or it could come from essentially exiting current investments into gold, which is particularly what happened with essentially all the ETF outflows that Bitcoin was essentially experiencing and Ethereum was experiencing, and also on the crypto market space. That money did end up going towards gold. Not all of it, but some of it did. So when gold essentially and silver decided to tumble back down, that money would exit those two assets in essentially either forms of liquidations or in forms of people pulling their positions, and that money has to go elsewhere. Elsewhere typically would have to be the crypto market space. It could also be stocks or tech stocks, but it could be most likely in towards the crypto space because of the whole AI bubble burst situation that's still on the pages. Now, moving on, essentially from the silver market space feeling some sort of a pressure, and it did come from the CME, and the crypto market space could get fueled because of that, and also the $34 billion of injections from the US government. The next news we're going to be covering on tonight's live is perspective. Perspective from a man that essentially hates the crypto space, everything to do with it pretty much. But I only wanted to share this news just to essentially go against his opinion. In case you did come across this on X or any other social media platforms, Peter essentially is the biggest critic of the crypto space. One of Bitcoin's notable, and he hates Bitcoin out of all cryptocurrencies. Before actually we talk about this, let's go inside the comment section first, and then we'll go straight into the next news on tonight's live. So let's see where we were at. As I said previously, this is live, which means if you do have any comments or questions, put it down in the comment section. More than happy to help you out. I love my family. Let's go, Scott. Share the live. Let's go, Scott. Okay, there's one idiot inside the comment section. Great, my friend. Outstanding. Let's go, share the live. Hi, how you doing? Theme. Good to see you. There is going to be some things happening in crypto. The institutions are accomplishing their mission of scaring retailers to get out early. They do not mind a lot of people they don't want a lot of people getting rich. I agree. People got to understand that we're at the best time possible inside the crypto space. a lot of things happened this year that were extremely positive. The negative might have essentially outweighed all the positive situations that did happen inside the crypto space. We essentially built a strong foundation for the crypto space, you could say, this year, with one, the SEC dropping all the lawsuits, two, the ETFs we had essentially inside the crypto space, three, the amount of essentially licensings a lot of crypto projects received, especially Ripple on the worldwide basis, four, how stable coins essentially were recognized inside the United States by the Genius Act, and then also recognized in Hong Kong, then recognized in Singapore, then recognized essentially in the UAE and Australia, and the list just goes on. And then essentially we had other regulations coming out from different jurisdictions in terms of the real world assets market space. We had institutions being able to essentially invest into the crypto market space. We had banks being allowed to invest into the crypto market space through the OCC, the approval that they essentially received. We had Ripple also essentially getting licensings in terms of their bank charter license. We had a green light. We also had essentially Circle and Paxos on the same level as well. A lot of things happened that were extremely positive for the crypto space that needed to happen a while ago, but it did happen in 2025. So there was a lot of great things in 2025 that happened for the crypto space. The only thing that people didn't get to see in 2025 was price action, but they did get to see a lot of foundation being built for the crypto space. And as I said, foundation is more important than price action, because once price goes higher and you have a strong foundation, you won't experience too much volatility, especially if regulations are in place. Not that volatility will completely go away or manipulation will completely go away. No, they'll always be there, but it wouldn't be as volatile if essentially it was. I don't know why there is weird people inside the comment section today. It's very weird. But the amount of volatility that we do experience now, we wouldn't be experiencing too much under essentially regulations and the foundation that's been built. Now, are you Catholic? I'm Christian. JP, good to see you as well. How you doing? Even any news on XLM, XDC, HBOR, and HOT? Not so much, I would have to say. I hear that real estate essentially is starting to be tokenized on the blockchain. That is true. A lot of real estate firms are essentially looking into being tokenized. As long as the infrastructure is put in place, the price will increase and be maintained. Exactly. Perfectly put, Scott. Now, Peter, the number one critic of the crypto space and number one critic of essentially Bitcoin, decided to weigh in his opinion again. One of Bitcoin's notable essential critics, Peter, has essentially condemned the business intelligence and software firm Strategy Inc. for its aggressive BTC buy. In a post on X, Peter argued that despite the heavy bet on Bitcoin over the past 5 years, Strategy has not made any mind-blowing profits. Notably, the current price of Bitcoin essentially noted that Strategy's paper profit stands at just 16%. This is because Strategy's average buying essentially Bitcoin purchase is around $75,000, leaving it with unrealized gains of about 16% should it choose to sell. The Bitcoin critic noted that over these essentially 5 years, it fell to a little over 3% returns on average per annum. And also Peter opinioned that essentially Strategy's Michael Saylor chooses the wrong asset to invest in. Strategy has been buying Bitcoin for the past 5 years with an average cost of $75,000. The company has a paper profit of just 16%. That's an average annual essential return of just over 3%. MSTR would have been much better off had Saylor brought in just about any other asset instead of Bitcoin. Was the exact same, essentially was the exact tweet. Now, he also considers Bitcoin's volatility and risk as being responsible essentially for the poor performance, suggesting that other less volatile assets could have yielded better returns. This stance essentially highlights the critics of long-standing skepticism towards Bitcoin as a store of value. The gold advocate has never missed an opportunity to take a swipe at Bitcoin, particularly when there is market stagnation or volatility. In November 2025, when Bitcoin essentially plunged below $90,000, a significant 28.5% decline, Peter, which essentially labeled BTC as digital gold narrative as fraud. He also claimed that over the years, the flagship crypto asset has not been able to prove its essentially reliable hedge against inflation. As of press time, essentially Bitcoin is changing hands at around $87,388.18. Look, regarding what Peter has to say regarding Bitcoin essentially not being the store of value, I agree. Bitcoin, in my opinion, is not essentially the best asset you can say in store of value, or the narrative of digital gold doesn't really play out when gold goes skyrocketing high and Bitcoin essentially tumbles down. It doesn't really play out. But Peter also went on to criticize the rest of the crypto space, essentially by criticizing XRP, by criticizing XLM, by criticizing quite a lot of essential crypto projects. What I would have to say to someone like Peter is people like Peter don't understand the end goal of crypto, which isn't price action. Crypto is not about buy, sell, buy, sell. That's stocks. Crypto is about utility. Essentially, it's what it brings towards the table to change the world that we're living in. It could be in terms of finance. It could be in terms of essentially going from Web 2 to Web 3. It could be in terms of data storage. It could be in terms of AI technology. In terms of essentially gaming, in terms of a decentralized world. It could be in terms of essentially tokenization, which the banks are taking, genuine consideration, interest into. So somebody like Peter, he may understand essentially the end goal of essentially crypto, or he's just an idiot, to be fairly honest. Now, moving on from what Peter had to say to criticize the crypto space when it's down, to this 90% down and left for dead. Are altcoins about to surprise everyone? For many crypto investors, the past year has been painful. Altcoins have struggled badly, with many tokens falling nearly 90% from their highs. In fact, some analysts, like essentially Michael Van D. Pope, say that this has been worse than the 2022 bear market. This has sparked a big question across crypto markets. Are altcoins finished, essentially? Okay, before we continue, audio is crackling. That's not good. Can everybody hear me, or is the audio crackling? That's not good at all. 1 second. Is it better now? Is it better now, or is it still crackling? Still bad. What about now? Is it better now? Is it better now? Or is it still crackling? One-sided. It's better now. Okay, good. Yes, better. Okay, good. Okay, good. Fixed. Since we paused, let's just go inside the comment section first. This was happening. As long as the infrastructure is put into place, I agree. I can't wait for these end days to be revealed. It will be interesting to know who they are with. I agree. Crypto is dangerous market to invest into. Any market space is quite dangerous to invest into. Good evening, Miles. I'm sorry I'm late. Jane, good to see you. How you doing? Hi, Miles. I hope your holiday worked great. Or just crackling. Fixed it now. Please sort out crackling. Fixed it. People have to remember that the main crypto are not getting quick rich schemes, but about generational wealth if the correct essential decisions are made. I agree. Hi, Miles family. Good to see you guys. Let's go facts news. Miles always answers your questions. Thanks, Miles. I sent you another question for clarification about your answer. It's Carl. Carl, no problem. Check it after the live. I think the market is very volatile. I agree, 100%. Okay, well, better. Good evening, Miles and family. Okay, a little crackle. CZ, good to see you. How you doing? Better. You were saying alts are dead. Crackle back. The crackling is back. That's not good. Is it still crackling? What about now? Is it still crackling? I'll be good. Crackling is back. We better now? Yes, the crackling is back. Not as bad. Okay. Not as bad as last time. Okay. Miles is crackling, but we don't want you to stop the live. I'm more cautious too. Okay. Better. Better. Can you speak closer? Good evening, Miles. It's CMF. Manny, good to see you. How you doing? Let's go CMF. Let's go Scott. Okay. Regarding altcoins, not all altcoins are built to survive essentially the multiple cycles. In 2017, for example, almost every coin went up simply because the market was booming. By 2020, the crackling is bad. Hey, Miles, the crackling. Now it is better. Hello, Miles. Mickey, good to see you. How you doing? It's perfect. It's much better now, Miles. Okay, so we're back to normal. No crackling. It's better now. Now it is better. It's good now. Okay, continuing forward. Not all altcoins essentially are built to survive multiple cycles. In 2017, almost every coin went up simply because the market essentially was booming. By 2021, things essentially changed. Only certain narratives and strong projects essentially delivered huge returns while many others lagged behind or faded away. History shows that this clearly, essentially, for example, Solana surged nearly 225x from its essentially cycle lows to its peak. Avalanche delivered around 55 essentially x returns, but many older projects, even well-known ones, failed to keep up. Litecoin, for example, gained roughly 17x in the last cycle, underperforming both Bitcoin and top essentially altcoins. Former hype coins like Neo even did worse compared to newer networks. The reason is quite essentially simple. Hype alone no longer essentially works inside the crypto space, which is the key word here. Hype no longer works inside the crypto space. Many older essentially altcoins have large groups of bag holders and fail essentially to solve real problems. Without growth, innovation, or essentially adoption, they lose relevance. Analysts often talk about two forces inside the crypto investing: alpha and beta. Alpha comes from the market rising overall. Beta is the extra essential return a project essentially delivers by outperforming the market. In the last cycle, Solana essentially delivered massive beta, by far outperforming the market. Litecoin and Neo essentially, on the other hand, lost value compared to their benchmarks. This is why only small number of altcoins ever deliver essentially life-changing returns. Despite all the pain, there are signs that the altcoin markets may be nearing a turning point. When altcoins are measured against essentially assets like gold or Bitcoin, valuations are somewhat essentially their lowest levels since major market crashes. This does not guarantee an immediate bull run. However, the analyst said that it signals that downside risk is shrinking and a recovery phase is going to be beginning. If liquidity improves and stronger projects also essentially continue to grow, a new generation essentially a new generation of altcoins could outperform in 2026, which is exactly what's going to be happening, and I'll explain why. That said, a small group of altcoins showing real adoption, rising essentially usage, and a strong on-chain data may still have the potential to essentially deliver major gains. The simplest way to put it is 2026 is going to reveal which crypto projects actually bring something towards the table and which crypto projects have been bluffing the whole time. Under regulations and essentially going into utility institutions, governments, and essentially liquidity, it's genuinely going to show us which crypto projects have been bluffing, don't really have any sort of utility or licensing to their names, and which crypto projects actually have licensings and are going to be doing well in terms of regulations that are put into place. And that's essentially the difference between going to 2026. It's not like previous cycles when we're in a bull market, everything booms at the same time. Going to 2026 under regulations, certain crypto projects will do extremely well, while others may struggle. The ones that have no utility will be the ones struggling to go forward. Now, moving on essentially from that perspective to South Korea. Before we talk about South Korea, let's go to the comment section first. That's what's happening there, and straight into the South Korean news. We were at I'm proud of myself as an OG of the CMF. I've learned so much over the 3 years with you. I am much more aware of things. Let's go, Scott. Manny, good to see you. How you doing? Mickey, good to see you. How you doing? It's perfect. Let's go. No crackling. 2028 next half. It's so far it's better. XRP is not going anywhere. Believe in my heart. I'm all in XRP. Let's go, Scott. Look for crypto with utility like XRP that has laid the groundwork. I agree 100%. It's better. Let's go. Now, South Korea. South Korean essentially lawmakers are facing some sort of scrutiny right now regarding essentially certain government members being involved in regulations and benefiting from them. So, Kim, for example, the floor leader of South Korea's Democratic Party, is facing scrutiny following a report alleging that he sought to pressure essentially Damu, the operator of cryptocurrency exchange Upbit, after his son secured a position at a competitor. According to a report essentially by news outlets that are coming out from South Korea, a member of the South Korean National Assembly Political Affairs Committee allegedly tried to politically essentially pressure crypto exchanges. South Korean politician family members, are pressuring crypto exchanges to bend certain essentially regulations or even let their family members start working for that exchange. The report claims that Kim instructed essentially his staff to attack Dama as a part of a monopoly concerns after South Korean giant essentially Never agreed in November to acquire the company for $10 billion. The merger would likely still be subject to regulatory approval, and Kim's position in a committee overseeing financial institutions has raised concerns about conflicts of interest. The report says the lawmaker has denied any wrongdoing, and the company's works include hiring. Essentially, my son has absolutely nothing to do with me and is deeply regrettable that my legislative activities are being linked to my son's employment through open recruitments, and the news outlets in South Korea and the crypto space in South Korea are angry at the South Korean government for trying to manipulate the crypto space by pressuring crypto exchanges to hire their family members. Now, we've had quite interesting stories regarding crypto space and crypto exchanges, being stifled by government institutions, but not on a level where they're being pressured to hire especially family members from their own governments. That's a new level of manipulation, I would have to say, coming out of South Korea, and it's embarrassing to be coming out of South Korea, to be fairly honest. Not good in any sort of a way. But South Korea is a huge market space for crypto space as well. So anything that does happen there could also have repercussions inside the crypto space. But for the time being, their actions have been caught, and that I'm happy that the crypto exchanges in South Korea are coming out and saying that they're being pressured by government members to hire their family members. Putting all that to one side from South Korea, and going into essentially what we're going to talk about next, which is regarding Russia. So moving away from South Korean crypto market space to the Russian crypto market space. Serb Bank has just issued Russia's first ever Bitcoin-backed loan. Serb Bank, Russia's second largest bank, issued its first ever Bitcoin-backed loan to essentially Intel Data, a significant Bitcoin mining farm in Russia. This pilot project highlights Russia's evolving stance on cryptocurrency regulations and could also signal a broader adoption of crypto based on financial tools amidst international economic sanctions. Russia's financial sector also witnessed a notable event as Serb Bank deployed its first Bitcoin-backed loan. Intel Data, a prominent mining company, secured the loan with mined Bitcoin held in custody. Aimed at regulatory adjustments, this initiative also highlights the gradual shift in Russia's handling of cryptocurrencies. As the pilot project, it signals potential future expansions, Anatoly from Bank emphasizes his role in redefining essentially digital asset collateral mechanisms as Russia navigates its legal crypto framework. Russia has talked about essentially legalizing cryptocurrencies in 2026, also coming out with the Russian ruble at the exact same time. The pilot test, essentially digital asset collateral mechanism aimed at Russia's evolving crypto regulations and supports cooperation with the central bank on crypto infrastructure. Analysts suggest the loan initiative could set a precedent for further adoption, analyzing financial frameworks, and Bank might essentially expand into digital asset markets, potentially influencing the financing of blockchain technologies. This pilot project also reflects a broader shift, essentially driven by regulatory evolution, reinforcing the need for strict innovation within Russia's financial sector. So, Bank, Russia's second largest bank, has for the first time ever issued a Bitcoin-backed loan, which is good news, not just for Bitcoin, for the rest of crypto space as well. It does show that Russia's coming out of this stage where crypto is not legalized and looking into the idea of legalization. If their second largest bank is offering essentially Bitcoin-backed loans, it's brilliant, especially going to 2026. We can expect more essentially payments or liquidity or regulations coming for the crypto space in the Russian market space. And Russia does have quite a lot of untouched money that should be in the crypto space. Now, going into the next news, moving on from essentially Russia to real world assets. Real world asset protocols reached $17 billion, overtaking DEXs in the DeFi sector. That's quite big news. It shows that the institutions and the banks weren't joking when they said they're heavily interested inside the real world asset market space. According to the data from DeFi Llama, real world assets have overtaken the decentralized exchanges to become the fifth largest category in DeFi, behind lending, liquid staking, bridging, and restaking. The real world asset surge essentially happening aimed higher institutional interest is expected to even hotter next year. In other words, expect a lot more institutions looking into real world assets and bringing their bags with them. Real world asset protocols not only overtook decentralized exchanges, DEXs, to become the fifth largest category by total value locked, now account for about $17 billion, essentially up from $12 billion in quarter four. The growth has impressed many, including those essentially at DeFi Llama, who noted that at the start of the year, real world assets essentially weren't even in the top 10 categories. According to essentially Vincent Lee, the chief investment officer at Kronos Research, the real world assets growth can be linked to a balance sheet insensitive rather than experimentation, as higher for longer rates have essentially made tokenized treasuries and private credit attractive as on-chain yields-bearing assets. All of that is happening aimed improving regulatory clarity that is lowering friction for institutional allocators. Other experts have also stamped Lee's statements, also linking to growth of the real-world asset sector, primarily to essentially to private credit and tokenized treasuries. Tokenized US treasuries are also especially an investor favorite, as essentially it has emerged as a gateway product for platforms like BlackRock's USD Institutional Digital Liquidity Fund, BUILD in other words, and similar funds also pushing the combined tokenized treasury segments above the multi-billion-dollar mark as of December 2025. Lee now also has become essentially now believes that the consistency, the constraint is no longer about tokenization itself and has become more about liquidity and the marriage of crypto with TradeFi, in other words, traditional finance connecting to the digital space. In 2026, he says attention needs to shift from headline TVL to factors like who owns issuance, where real-world assets gets deployed as collateral, and which venues capture secondary market flows. As Cryptopartners essentially reported during the weekend, real-world assets essentially were one of the few sectors that were actually in the green in terms of token prices in 2025, where BTC and ETH have essentially struggled in terms of their ETF outflows. Real-world asset market space is climbing. According to reports, another factor contributing to the successfulness of essentially real-world assets this year has been the rally of critical essentially metals like gold and silver, which have been attracting investors worried about inflation and dollar debasements. Those rallies in gold and silver this year have reportedly encouraged more capital to invest in tokenized commodities, and according to recent data, the market cap of tokenized commodities now nears $4 billion, led by gold products such as Tether Gold and Paxos Gold. The trend is set essentially by gold and silver have transformed the tokenized commodities sector from niche of real-world assets to macro-relevant assets with real demand. And since they are supported by clearer pricing and custody standards, they easily essentially plug into DeFi and institutional systems and has worked well. Clearly, another key signal also driving the rally has been interoperability. Lee believes that the true acceleration will happen when tokenized commodities no longer essentially function as isolated products and have been given the ability to move seamlessly across venues and in terms of chains. So, real world asset market space went from pretty much zero to hero, ranking essentially above essentially dexes, which is quite impressive. And it shows that the institutions and the banks are really heavily essentially going towards tokenization if that market space is essentially climbing at the rate it is. And regarding gold and silver essentially also becoming tokenized, US bonds becoming tokenized, which is hence why it's being pushed. Essentially, tokenization has climbed quite a lot. And we can expect a lot more tokenization essentially happening in 2026, even according to Lee, the essentially head of research at Kronos. Now, moving on essentially from the tokenization market space climbing rapidly and essentially being overshadowed by the negativity inside the crypto space to SoftBank. But before we talk about SoftBank, let's go inside the comment section first. Let's see what's happening there, then we'll go straight into the next news. You think AVAX file near ACH Quant Ondo will do okay in a utility run? Good question, T. Okay, do I think AVAX is going to do well in a utility run? Yes, I do believe it's going to do well. File and Near should do well in the Asian market space. ACH will do well as essentially in terms of ramp on and ramp off essentially asset, but it does have to expand beyond ramp essentially on and off ramps. Ondo will do good, essentially Quant will do okay in my point of view in terms of utility. Ondo will do good in terms of essentially the director, essentially the man behind Ondo. He's, in my opinion, quite a intelligent person, and the moves that he's pulling of Ondo would actually is going to benefit Ondo in the long run, especially being one of the bigger heavy hitter holders of BlackRock's essentially assets. Hi Miles of CMF, Stormy, good to see you. How you doing? Hi Miles of CMF, Peg, good to see you. How you doing? If one had the choice and money to invest in silver or XRP, which one is better? Silver or XRP, which one is better? XRP. Reason why that XRP is a better investment than silver is because silver is going to be at one point reaching some sort of a glass ceiling, and it won't be able to go beyond that. It will just touch the gas ceiling essentially and drop. And a lot of people might disagree with me regarding me saying that silver has some sort of a glass ceiling that it can't break through. XRP doesn't really have a glass ceiling holding it back, and it can reach new heights and it can essentially reach new price points that people wouldn't even see coming. Well, people inside the cryptos, inside the XRP community would see it coming, but people that are not fans of XRP, don't like XRP, so on, they would never see those price points coming. But in terms of honestly, which one's the better investment? XRP. Silver has a glass ceiling, and when it hits that glass ceiling, it's going to drop. And also, we got to factor in that the banks also, essentially banks and institutions, some institutions don't want silver climbing too high. And what I mean by that is the only reason silver dropped 13% overnight and a lot of liquidations happened is because the CME exchange decided to essentially manipulate the market space. The Chicago, the simplest way to put it. I don't know what happened there, but it's all back to normal again. Thanks, Miles. No problem, Stormy. Miles, what do you think about Litecoin? This crypto is still there and stable. Why? BTC went down. When BTC went down, why is in your opinion? Am I not back? Black screen, yeah, I realized. Everybody can hear me, but nobody can see me. The thing is, I can see my screen, but you guys can't see me. Oh, there we go. We're back. Give it a few seconds. The screen will be back. Give it a few seconds. Should be back. Today's going to be an interesting live. I don't know what's happening. I really don't know what's happening. What the hell is happening? Why back? I'm back. Okay. Good. Okay. You're back. I have no idea what happened. I'll be very honest. Miles, before you go, just please don't take your opinions. I'll tell it to you 1 second. Miles, in your opinion, do you think about what do you think about Litecoin? This is still there and stable when BTC went down. What's your opinion? Litecoin, in my opinion, is not the best project. Blank screen. Oh, we're back. We're back. Online. We're back. Okay, we're back. Now, SoftBank. Yeah, but if you bought silver 20 years ago, you were good. I agree with that. If you bought silver 20 years ago, you would be good. I agree with that 100%. Now, and again, not that silver's a bad asset. Silver's a great asset. Gold is a great asset as well. Yeah, but it's just the timing is a bit off right now to go for it. Okay, SoftBank. Acquires essentially digital bridge $1 billion. Why is this interesting that SoftBank is approaching essentially this particular AI firm and essentially buying it out? Because SoftBank originally pulled all of their money out of AI infrastructure when Michael Saylor said we're going to be going through an AI bubble burst. We didn't so far. And it seems like SoftBank is back with the AI investments, which shows confidence towards tech stocks essentially going forward. And when tech stocks are going essentially good, Bitcoin tends to follow tech stocks, in other words, which then essentially altcoins follow in suit. And again, all of this is because we don't have any regulations whatsoever. But SoftBank is back inside the AI infrastructure space and buying out essentially a company now, not only putting essentially investments forward by buying out shares of companies, but they're essentially purchasing an AI infrastructure company completely out, which is a good sign for tech stocks. Now, moving on essentially from SoftBank to Galaxy Digital. Galaxy Digital's CEO, essentially Michael Novoscott, flags a hidden risk for investors still underweight in terms of crypto. Mike Novoscott, the founder and CEO of Galaxy Digital, today said that the crypto markets may be setting up for a sharp upside move as global liquidity conditions shift, warning that digital assets could become the paying trade for professional, essentially, investors who remain underexposed. Speaking in a year-end conversation with Skybridge Capital founder Anthony, essentially Novoscott, pointed to a combination of falling inflation, a potentially essentially more dovish Federal Reserve, and mounting stretch in essentially global currency markets as key macro forces that could reshape price allocations in 2026. Novoscott essentially said that crypto has significantly underperformed assets and similar essentially macro narratives such as gold and silver, despite essentially persistent inflation concerns and expectations for easier monetary policy. He also noted that professional investors have largely moved into risk-off positioning in digital assets, while broader retail engagement has completely faded. He cited subdued sentiment indicators, including essentially low search interest and declining social media activity around essentially Bitcoin, as the signs that crypto is currently essentially underdown. Now, according to Novel Scott, this lack of positioning increases essentially the risk of rapid upside move if momentum essentially returns. The painful trade essentially is that crypto is higher, not lower, Novoscott said, adding that if prices begin to gain traction, institutional investors may be forced to chase exposure. He said crypto has all the ingredients for a move higher, essentially, but has yet to break key psychological levels that would confirm renowned momentum. Novoscott said he expects a new Fed leadership team to learn essentially to lean more dovish, potentially accelerating interest rate cuts and pushing the US dollar low. Also, they always essentially he also highlighted that currency trades such as being long the euro or Australian dollars against the US dollars as essentially a part of a broader macro positioning, signaling expectations for continued dollar softness. In other words, the moment essentially Jerome Powell is out of the Fed and whoever's chosen to replace it by Donald Trump is going to be a man that's going to be doing back-to-back rate cuts, which would put pressure on the US dollars, which also will be beneficial for the crypto space to go up as the alternative market space. In other words, riskier assets become much more appealing in 2026 for many reasons. One is going to be regulations, and two is going to be the increasing rate cuts we're going to be having from the process chosen by Donald Trump. According to Novoscott, easing financial conditions would increase global liquidity, a factor he described as central to Bitcoin's long-term price behavior. Bitcoin is a global liquidity story, he said, emphasizing that shifts in monetary policy often precede major moves in crypto markets. Beyond US policy, Novoscott also flagged Japan's bond market as an appreciated risk factor. He pointed to the sharp rise in the Japanese long-term interest rates from near zero to around 2% as potential early warning signs of broader instability. He also said volatility in the yen carry trade could have ripple effects across global markets, including crypto, if Japan is forced to intervene aggressively or alter its monetary stance. Novoscott said Japan's challenges highlight essentially the limits of monetary accommodation in an environment where inflation pressures are beginning to essentially surface, adding that central bank responses to those pressures may be critical for global asset prices. He further also said the interactions between inflation trends and central banks' policies and global liquidity will determine whether crypto remains range bound or enters a new expansion phase. So, simplest way to put it, going into 2026, essentially having a replacement for Jerome Powell, a man that's going to be doing back-to-back rate cuts because of Donald Trump, is going to play out very positively for the crypto market space, not so much for the US dollars going forward. Now, let's talk about China next on tonight's live. Before we talk about China, let's go start the comment section first, and then we go into the Chinese news. So let's see where we're at. You're good, yeah, but if we pull something, it's fine. I agree. What are your top 5 crypto investments? The show is fire. Thank you so much, Caldwell, for the kind words. My top 5 crypto investments would be, in terms of utility, XRP is number 1. In terms of finance, it takes the rankings by a mile. Some people see it, some people don't. XLM, I would have to say, be ranking in second as a little brother, still inside the financial sector because that's a big play. I would say XDC will be taking the rankings in terms of number 3. I would say essentially between 4 and 5, I will be between HBAR, AVAX, and ONDO essentially is what I would place it as. Good evening, Miles, and how are you doing? I'm doing great, Kali. Good to see you as well. Greetings, Miles at CMF. Ray, good to see you. How you doing? When is Powell going to be out? Is there a date? Yes, May. May is when Jerome Powell is going to be completely out. Now, China. China is about to be introducing something quite interesting that essentially nobody's done so far, which is this. And it is something that could be introduced in other jurisdictions in terms of CBDCs. China's digital yuan is set to offer interest, redefining CBDC usage. Now, in terms of CBDCs and essentially interest, that's never been applied. The idea of CBDCs was it's just a government token that is, essentially controlled. This move could transform how millions of users interact with digital money, both domestically and internationally. The People's Bank of China, which is essentially their central bank, Vice Governor Liu Li confirmed that the digital yuan will evolve from digital cash equivalent to an account-based digital deposit money system, aligning it with the M1 money supply metrics. For the past 5 years, the Chinese yuan has been testing and attracting millions of users from the public and private sectors. Transaction volumes reached over 7 trillion yuan, $986 billion, by mid-2024, largely driven by retail and domestic activity. However, current adoption faces limits, as the Chinese yuan lacked interest essentially and integrations with broader banking functions. The upcoming changes aim to correct this, offering users interest on wallet balances and enabling banks to treat them like deposits under the People's Bank of China supervision. Starting January 1st, the Chinese yuan holders can earn essentially interest, creating new incentives for widespread adoption. Moreover, the system will categorize wallet balances by liquidity levels, requiring commercial banks to hold reserves. So imagine holding digital pounds, digital euros, or digital essentially dollars, and you earn interest on it. It would make a lot more people go towards CBDCs, especially people that don't understand CBDCs. This structure strengthens financial stability and ensures regulatory oversight. Additionally, the upgrade enhances practical applications, allowing seamless use in payrolls, loans, and investments. Besides retail use, the new model targets government services and cross-border trade integrations. The system retains compatibility with distributed ledger technologies while keeping core monetary essentially functions intact. It will continue to serve as a unit of account, store of value, and medium for payments. However, the shift raises questions about whether China's yuan will supplement or replace traditional bank deposits, and the integration of interest and liquidity-based reserves may attract both individual and businesses, offering high returns and reduced conversion, essentially friction. So, China is going to be introducing interest on CBDCs. That is most likely going to be something that's going to be introduced on a worldwide basis. In other words, other countries getting involved regarding their CBDCs, offering interest to bring more people towards the table. Because if people weren't interested, retail people, if they weren't interested inside of CBDCs, or they didn't understand what CBDCs were and they were just afraid of digital payments, now offering interest on CBDCs might make a lot more people go towards CBDCs, believe it or not. Moving away from China and talking about Grayscale next. Grayscale essentially predicts institutional shift in crypto by 2026. Actually, before we talk about that, let's go inside the comment section first. That's what's happening there. Good evening, Miles. Kali, good to see you. How are you doing? Ray, good to see you. T, okay, we were here. The American dollar is going to rule Ripple. Let's go, JP. I read an article talking about how quantum computers could crack blockchain and cold wallets would not be protected. What do you think? Regarding essentially the articles that are going around on quantum computing has two sides. One, it's beneficial for the crypto space. The second side is, in the wrong hands, it can become essentially, a weaponized digital infrastructure. In other words, Bitcoin and Ethereum are the most vulnerable assets in quantum computing by a mile. XRP Ledger is right now being tested essentially back to back to become quantum resistant. And a lot of blockchains are testing back to back to become quantum resistant. But the two crypto projects that are extremely essentially vulnerable in quantum computing, Bitcoin and Ethereum, by a mile. Now, cracking a little bit back, sorry about that. Talk about a way to kill the usage of stablecoins and attract them to CBDCs. Great outlook. Miles, another great program tonight. Through, as always, it's appreciated. Thank you so much, Scott, for kind words. Now, Grayscale. Grayscale have given their predictions for 2026. And here it is. Grayscale predicts institutional shift in crypto by 2026. Grayscale Research predicts that by 2026, institutional investments will dominate the cryptocurrency markets, as mentioned in their reports. 2026 Digital Asset Outlook, Dawn of Institutional Era. This is what essentially Grayscale has essentially revealed today. The 2026 Outlook Institutional Era for the crypto space. The shift towards institutional investments suggests potential growth in crypto assets, impacting financial markets and possibly leading to enhanced regulatory frameworks. Grayscale Research has projected the rise of institutional era in cryptocurrencies by 2026. The report highlights anticipated growth driven by regulatory clarity and macro demands. Institutional investments 2026 equals to regulations. Due to institutions cannot step into a market space with too many gray areas, which means regulations in 2026, which means then institutions in 2026, which also means utility in 2026. Hence why Grayscale coming out with a report titled 2026 Digital Asset Outlook, Institutions Embracing Crypto Investments. The report anticipates a shift influenced by platforms incorporating crypto into model portfolios. Where there are no direct statements from key leaders at Grayscale accompanying the report, the document itself is essentially indicative enough of industry essentially trends. Among other essentially Bitcoin, Ethereum, among other digital assets are expected to see increasing institutional investments. The report also foresees stablecoin, blockchain, and infrastructures like Link benefiting significantly. Potential essentially regulatory and financial outcomes include legislations introducing stablecoin usage and essentially cross-border payments, which are predicted by Grayscale's visiting substantial essentially market growth. Grayscale's 2026 crypto investments themes with institutional adoption insights outlines data analysis supports those essentially forecasts of increased institutional involvements, and the Grayscale report compares upcoming trends to previous retail-driven cycles, unlike past peaks. The projected cycle anticipates steadier institutional buying, not influenced by federal essentially rate hikes, which is good. Experts also have suggested that the baptism US legislation will provide the necessary clarity for expanding tokenized assets. Baptism US legislation will provide the necessary clarity for expanding tokenized assets. Analyze also current predictions. Experts suggest that there's such clarity could potentially essentially increase their market presence by 2030. So, 2026. It's all about institutions, it's all about regulations, and it's all about foundations, essentially more foundations being built for the crypto space. And it is a perspective coming from Grayscale's newest, essentially, report today. On top of 2026 being the institutional era and governments being inside 2026 inside the crypto space, real world assets expanding, regulations expanding, licenses also expanding inside the crypto space. Ripple. Ripple powers Europe's core banking essentially through TAS network gateway. If you haven't seen it or you haven't heard about it, you're about to now. Ripple has just secured essentially a strict foothold in Europe's core banking system via the TAS network, essentially gateway, linking banks directly to Target 2, SEPA, and essentially T2 and T2S, and positioning itself as a key bridge between traditional finance and blockchain settlements. Through the TAS network gateway, European banks gain seamless access to high-value essentially payment systems, real-time gross settlements, and cross-border euro transfers. Ripple's integration lets these banks settle transactions faster, cheaper, and more efficiently without altering existing essentially banking infrastructure. Well, Europe is advancing essentially towards an interoperable essentially financial ecosystem with the ECB targeting European Central Bank targeting DLT-based settlements by 2026. The boost essentially cross-border efficiency, transparency, and liquidity. Ripple's integration with TAS network positions it essentially as a ready infrastructure to power the next generation of financial architecture from day one. Ripple's integration goes beyond speed and efficiency, enabling banks to settle transactions on chain while fully meeting regulatory standards through built in compliance tools. Critical as regulators demand transparency, auditability for cross border payments, and tokenized assets. Notably, Ripple is reportedly in essentially late stage preparations for 2026 IPO, signaling a transformative milestone for both the company and the broader crypto financial ecosystem. Ripple Streak essentially timing positions it ahead of competitors as Europe builds DLT settlement frameworks, essentially early integrations with the core banking rails, offers institutions essentially a trusted, high volume, ready blockchain solution. Simultaneously, Ripple is expanding in Asia, exploring XRP-based yield infrastructures and real-world asset tokenizations on the XRP ledger. Ripple's integration essentially with TAS Network Gateway positioned as a key bridge between traditional finance and blockchain, essentially. With Europe moving towards interoperability DLT systems by 2026, Ripple offers banks a compliant, scalable, and ready to deploy solution, securing its role in the continent's next generation financial infrastructure. As Europe moves towards DLT-based settlements, Ripple's early TAS network gateway integration position as a compliant and reliable essential movement, more than keeping pace with modernization, Ripple is defining the future of cross-border payments and settling standards for decentralized banking. So, if you didn't know, now you know that Ripple essentially has its foothold inside of any financial markets you could pretty much put your finger on. If we're talking about essentially the Middle Eastern market space, Ripple essentially has a massive foothold in terms of the Ripple, essentially in terms of the Middle Eastern market space, in terms of the Asian market space, in terms of the European market space, in terms of even the American market space. And if there are people out there that are still essentially doubting Ripple's footsteps inside the financial sector, you need to be reading some PDF documentations and stop listening to Ripple haters or XRP haters or XRP Ledger haters or even RLUSD haters. Because when it comes to the financial sector, essentially XRP is pretty much Ripple and XRP Ledger, RLUSD are going to be ranking here, but everybody else is going to be ranking below them inside the financial sector, just the financial sector. As I've put it before, honestly, the simplest way to put it is, as I've put it before, you have to see the easiest way to find out which crypto project is going to be doing the best in terms of regulations is which crypto project is going to be benefiting from regulations. And that crypto project is going to be the one with the most amount of licensings, the most amount of essential acquisitions made, the most amount of partnerships made, and the most essentially in terms of becoming a bank, which is what Ripple's trying to achieve. And in terms of 2026, what's going to be happening there? 2026 is all about one, regulations, two, institutions, three, essentially real world assets, four, CBDCs, and five, the crypto space, pretty much crypto projects that have utility going higher in price points. That's what's going to be happening in 2026. Banks, institutions, regulations, licensings, foundations, CBDCs. We're moving away from retail and into the institutional era, as essentially Grayscale put it, or what I put it essentially about a year ago. We have reached also the endings of tonight's live. This was the CMF live show. CMF stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday, Friday, 10 p.m. long time onwards. However, we are coming up to the New Year's, which means I will see if I go live tomorrow or not. It's 50-50. But in terms of actual New Year's, so 31st, essentially, so in terms of actual New Year's, I won't be going live on New Year's, but we will be joining each other after New Year's, in other words. In terms of tomorrow, I'll let you know inside of X and a Telegram group if I'm going live or not. But in terms of after New Year's, obviously, we're going live as usual. Before we do go, let's go inside the comment section first. This is happening there. And then essentially we will call it a night. Let's see where we're at. Talk about, okay, we were here. Hey, Miles, I'm very upset with market conditions. When can we see a bull run? I'm ready to give up. Don't give up, Johnny, in any sort of way. Miles, have been invested 2 years. I mean, OG, please keep that in mind. Deal. Let's go, Scots. Family, stay strong together. Let's go, Scott. Let's go, CMF. Let's go, Scott. The world. Let's go. The best online group as group essentially communicates offline on online. Let's go. The XLP Ripple etc. Haters own XLP2. I agree 100%. 9 miles of CMF. Let's go. Pablo. See you tomorrow sometime as usual. JP, let's go. The world. Thank you, Miles. See you soon. Let's go. Mike, the XLP and Ripple haters probably own at least 1,000, 2,000 XLP. I agree. Good at Miles. Many thanks. Let's go, CZ. Thanks, Miles. Let's go, Scott. Honestly, it's great to be back. I'm so happy to be back. And honestly, if I don't go live tomorrow, I wish all of you a massive Happy New Year. And I hope all of you do so well next year and it goes absolutely amazing for yourself and for your family members. Thanks for sticking for us and have a great night. Happy New Year, Miles. Let's go. Artists, thank you so much. Happy New Year to you as well. Night, Miles. Let's go. Callie, appreciate the live, Miles. Thank you. Good night, Miles and CMF. Let's go. Jason, I do not communicate with any of my family members before January 1st, 2026. Please, New Year's, be safe. Let's go. Night, Miles. See you, DM. Crypto, I'll check it after the live. Thanks, Miles, for your nice live show. Please have a look at your text messages. I will definitely call and check them out. Mike, let's go. Thank you, Miles, for your valuable time. Great show as always. Night, everyone. Let's go, Joe. Good night, Miles. Let's go, Funky Brother. Good night, Miles and CMF. Thanks for a great live. See you tomorrow or in the New Year's. Let's go, Freedom Forever. Good night, Miles. Let's go, Jane. Thank you so much to everybody honestly that tuned in to tonight's live show. CMF members, love you all. If I don't go live tomorrow, wishing you the best Happy New Year's for you and your family members, and I hope it's a great New Year's for you going forward. The disclaimer of this live show, as always, is no financial advice, no political advice, and whatever I say is only for entertainment purposes. Like, retweet if you already haven't. If you have, thank you so much. Good night, Miles and family. Love my family, and I hope I pray God the one that we are accelerating because of our patience. Let's go, Scott. Good night, everyone. Let's go, Miles. I'm praying every day that we will have a very nice and productive New Year. Let's go, Funky. Wishing everyone a Happy New Year. Let's go, Jason. See everybody. Either tomorrow or after New Year's. I'll let everybody know. Love you all. Like, comment, follow, subscribe, retweet if you already haven't. If you have, thank you so much. And honestly, it's been an amazing year, as always. Good night, Miles and all CMF. Let's go, JP. Let's go, Mike. Wishing everyone a happy New Year. Let's go, Jason.